First, I'd like to thank everyone for joining us today. My name is Michael Grillo. I'm with ACI Worldwide, and I'm joined with Gerard Voss from Spectrum Messaging Services. We know you have busy schedules, and we appreciate the fact that you took time to join us today. We hope you'll find the information thoughtful and give you some things to think about in your own environments when it comes to improving customer service and fraud operations with mobile alerting. Today we're going to give you some background on Spectrum and ACI's relationship with Spectrum. We're going to talk a little bit about the market insight on how mobile alerting affects consumer relationships with their banks and issuers. We're going to cover some practical applications of ACI mobile alerting with the various ACI solutions. And we're going to cover off some real-world examples of how global institutions have successfully deployed the solution and some results related. At the end, we'll spend some time for some Q&A. So first up, I want to spend a moment to talk a little bit about Spectrum Message Services. Specializing in flow-driven financial and telecom traffic, they are a technology company that offers several solutions, including MoneyGuard SMS and Mobile payments platform, their Technocall IVR and call center solution, and Floware SOA business process management solution. ACI mobile alerting solution is powered by their MoneyGuard solution. Spectrum has been around for 10 years. They originally started in Hungary in 1993 and now also have offices in Australia. The relationship between Spectrum and ACI dates back to 1999 when Spectrum first integrated its MoneyGuard mobile alerting solution on the Base24 payments platform at OTP Bank in Hungary. We then also started working with them on our payments risk management solution, Proactive Risk Manager, in 2006 at that same entity. And in 2008, we entered a formal partnership with them in the EMEA region and then expanded that to include offerings in the Americas and Asia Pacific as well. I'm going to move on to a little bit of market information related to mobile alerting from a fraud and consumer service perspective. Last year, ACI embarked on its third global card fraud study. We surveyed 5,200 consumers in 17 countries around the world. We teamed with U.S.-based analyst research firm IT to interpret and report on the findings and publish a formal report. The result is a comprehensive picture of consumer attitudes and experiences with credit, debit, and other forms of card fraud. We conducted the survey last year to help our banking and retail clients better understand what consumers think about fraud, their experiences with fraud, and to help them understand the impact fraud has on existing and future relationships with the financial institutions. So the survey included some key findings. 27% experienced card fraud in the last 5 years, so just a little more than 1 in 4 experiencing card fraud. 82% said that they were very interested in being notified prior to the bank taking action. And we'll get into that a little bit more in the next couple of slides. 74% prefer that no additional transactions are posted until they respond to a fraud alert. And 21% of cardholders said that they would leave their institution after experiencing fraud. So, if you kind of look at that at a high level, what does that mean? Fraud is being experienced by many of your customers. The majority of them want to be informed and want real-time action to be taken based on their instructions. And, 20% of the customer base could leave as a result of fraud. So that's not an insignificant number. As we look at some of the credit card fraud rates by country, you'll see the 17 countries that were included in the survey broken out here. The U.S. and Mexico lead the way and have been the unfortunate benefactors of fraud, as we are the last bastions to roll out EMV and still employing the signature versus more secure PIN verification methodology. But even in some of the EMV countries like the UK, almost a third of consumers surveyed experienced some form of credit card fraud in the past 5 years. And as you can see, also on the other end of the spectrum, Holland enjoys very low card rates at less than 10%, as do some Germany and Sweden, hovering right around the same area. When we look at the debit card fraud rates by country, they're a little bit lower in general. That's largely influenced, the rates are a little bit lower, I should say, and that's largely influenced by the nature of PIN transactions associated with a debit card. The one slight change here is, China having a more significant rate on debit than they did in credit, and it's likely due to the card usage in China, debit card usage in China up from 31% to 56% from 2011 into 2012. The next few charts look at consumer preferences related to customer notifications and those preferences in the various regions. So we asked consumers which actions they'd prefer if they were to receive a notification or alert from their bank. The response options included: don't allow any transactions until I respond, continue to allow transactions consistent with my past history, and allow all activity unless I notify them otherwise. As you can see, in all the countries, there's an overwhelming number of respondents who want the bank to hold off on transactions until the customer can engage with them and respond to those types of alerts or notifications. And those numbers range from more than half, the UK being the lowest at 58%, to almost 90% of those in Mexico identifying that they want the transaction stop until they had the chance to respond to an alert. So here you can see there's a request or requirement for getting involved in the management of the account and validating transactions as part of their desire for interactive work with the bank. Here we just, I couldn't put them all on the same chart, so this calls out customer preferences in the Asia Pacific. And same here, almost 2/3 of customers want similar notification and a block of transactions until they can respond. And given these numbers, again, the need for bidirectional communication really would be required in order to fulfill the wishes of the consumers themselves. So the report delved into many facets. It's a fairly large report, but in general, the report identified that financial institutions risk losing customers due to fraud. The report identified that attrition rates, as we mentioned, averaged 21%. Of the cardholders who receive replacement cards, so those that were affected by fraud and got a new card issued as a replacement, 46% used the new card less than the original. And that activity, also referred to as back of wallet, ends up translating into lower transaction fees for the bank and less stickiness. And that's something that the banks work very hard to achieve in terms of keeping their customers engaged in using the cards that are issued for various reasons. Only 25% of the government agents think that the government agencies do a good job of protecting account information, compared to 43% who attribute that same strength to financial institutions. So there's a perception that the banks are doing better than the government or law agencies when it comes to protecting card fraud, but there's likely still more work that can be done there. And I didn't mean to skip over the more than half used cash as an alternative form of payment instead of using the replacement debit or credit card. So not only does that minimize fees, but pretty much eliminates them altogether, because you're not going to be benefiting from that type of cash activity. A few more items that came out in the survey is that consumers really want to partner with their banks for fraud prevention. More than 82% are very interested in being notified, and this is across the board. We kind of had some breakdowns by country, but this is overall 82% of the respondents want to be notified prior to the bank taking action. 74% of cardholders prefer that no additional transactions be posted until they've responded. And mobile phone and text messaging lead the way for alerting fairly consistently across the board. Ideally that resonates, I would think, for most of us on the phone, on the call today, in that consumers more so today than ever carry their mobile phone with them, and it is probably the easiest, simplest way to contact the consumer at any given time. So that was a little bit about some of the fraud aspects of alerting and engaging with the consumers. Javelin, which is a U.S.-based research firm, also did a study last year, and they surveyed 8,500 customers with smartphones, and in their report called Roadmap to Alerts, they identified that text is gradually replacing email alerts, growing 4 times faster than the adoption of email alerts. Again, making sense because of the nature of having that device with the person at all times. There are certain valued alerts that they identified, and you can see the ranges here. So they want to be notified for suspicious transactions. They want to get an alert if a large transaction has taken place, so more than $200 or more than $500 has been withdrawn or at an ATM. They want to get bill reminders via alert. They want to get low balance alerts. So if they go below $100, they want to be notified, or if they go below $50, they want to be notified because maybe they have another transaction that's pending. They want to avoid those the fees associated with overdraft. And they also are starting to want to be notified via alerting for special offers. So 3/4 of the consumers rate 1 of the 5 above very or extremely useful, and more than 20% of the users that receive alerts are influenced by this for their choice of FI, meaning that's a feature that they place a lot of value on when it comes to working with their customers. So, working with their banks. So some recommendations from the report itself. They recommend the banks start with the security alerts, move to the personal financial management type activities, cash flow, bill reminders. Ensure that it's real time and it's interactive. Give that customer the opportunity to communicate immediately with the bank. And then, as we do with most things, use opt-out to tailor to customer settings and preferences. So this allows them to sign up for what they want, and also make it more useful to them based on what they find most important. So that's a little bit of the market background that consumers have participated in and shared in some of these research reports. We're going to have our first poll question here, and I'd like you to take a moment to respond in the poll window, which will show up. And the question is, do you currently offer mobile alerts to your customers today? So you can either choose yes or no. What we're trying to just understand is here how many people have a mobile alerting option for their customers, and that could be fraud or service alerts. One thing that I do want to identify is that the report that the ACI and ITA report that we just covered a few moments ago, that report is available, and we can provide a link to that in the follow-up to the webinar for those who participated. So I think I even saw a question come in already asking if that report is available. So we can make that link available, and you can have access to that. Okay, so looks like we have some results here. Of the participants, only 25% today offer some form of mobile alerting, and 75% do not. So something to think about as you look at the results of the surveys, as well as what Gerard will cover as we move forward. In terms of placing some value, you'll see some real-world examples of where that mobile alerting in those financial institutions really benefited them and their customers. We have one more poll question here that I'd like you to take a look at. Again, the questions will show up on the right. And the questions are, if you offer mobile alerts today, so for those who did, are they, one, offered in near real time with information collected from the transaction, such as amount, transaction type, and location? Two, are they actionable by the consumer via response SMS? So does the customer have the opportunity to reply back with a text, either with some information confirming the transaction, or just having that bi-directional option? And three, is the mobile alerting solution directly linked to your fraud and transaction systems via two-way communication? So this then takes that question beyond just to the fraud and transaction system option. So we're going to give a moment here for people to reply. And with that, while we're waiting for those results to come in, I do want to just remind people, as you have questions, please feel free to put them in the Q&A. This webinar is being recorded, so we will share the recorded link with you as well as a follow-up. So we'll just give this another moment. So for the results, are they offered in near real time with information collected? 100% of you said yes, they are. Are they actionable by the customer? 100% said no, they are not. And are they directly linked with your fraud and transaction systems? The 100% of you said they are not. So some interesting results there. And I think, as I get ready to turn this over to Gerard, he may have a perspective on some of these results, and as he continues to go on into the rest of the presentation. So with that, Gerard, I'm going to turn it over to you to cover a little more practical application of mobile alerting in action.
Thank you, Michael. So good morning or good afternoon, depending on which region you are in. I want to address a bit more on how we actually achieve mobile alerting and how we link it into the systems. I think the poll was very significant. So firstly, only a small percentage of the attendees currently offer it to their customers, although as you see from the poll, from the research, over 80% of consumers want to be involved. That's not the current practice that you see. And the second point is that of those of you that are providing mobile alerting, currently it's not easy for the cardholder to react to those alerts. So what we very much promote here are alerts where you can directly action and you can reply to the text message, and that immediately gets linked into the fraud system or the transaction system. So with that, I'm going to move to the next slide. So we see mobile alerting as an overall contract strategy. So it's not just linked to fraud. It's basically a way you interact with your customers in this day and age. And we classify that in two different groups. So there are the bank-originated alerts, which obviously are firstly the fraud alerts that are triggered by transactions, and we link them directly with the fraud management system, PRM. So when a rule fires in the system that the transaction is deemed to be risky, then the mobile alerting system, the MoneyGuard system, will automatically extract the transaction data and send a message to the cardholder with the transaction data, and gives them the opportunity to reply if it's not them, and then automatically block the card. What we also do, and that again links with that research, is that if you are taking an action because you don't want to take that risk, say it's a €5,000 or dollar transaction in a foreign country, and you don't want to approve it because it hits a real-time rule, you still want to provide that customer service to notify the customer that you have blocked the card and give them a reason why. So what we do then is we trigger that a real-time rule has fired and declined the transaction, and we communicate with the customer to tell them that that transaction was blocked because it was suspicious of fraud. And we allow the customer again to respond to say, no, that was me, that wasn't fraudulent, and immediately capture that false positive and take action on that response to either ice the account so that you can then redo the transaction, which will then be approved. We also use it in the fight against the identity fraud. So if you change your address, if you set up new payees in your internet banking, or if you issue with a new card, we also use mobile alerts to notify you on a different channel, which is your mobile phone, of those events. You're probably familiar. What's very popular as well these days is that if you do an online banking transaction and it's over a certain limit, I'm based in Australia, and all of our major banks are doing that at the moment. You will get an alert on your phone with a one-time password that you then have to enter into the browser to have that transaction go through. And then we can start doing some smart things. So we can look at geolocation. So if you're logging into your internet banking from an IP address that's not your normal IP address, then we can introduce a second factor password that's sent via SMS to the mobile phone. And we're also using geolocation to detect if the consumer is in the country where the transaction takes place with a card present transaction, and take action based on that result by looking at a home location lookup and see where the phone is. And finally, in the card not present domain, 3D Secure can also be effectuated with mobile alerting. So you can send transaction detail to the customer. Customer confirms the transaction with their mobile phone, and then the transaction goes through. And what's often, when we often implement systems, the collections department also like to use this medium to send collection messages, because a lot of consumers have just forgotten to pay their bill, and they're not necessarily not meaning to pay their bill, and an SMS is sort of a gentle reminder of that, and we have quite a few implementations. But the second side of the equation is that we also want to provide mobile alerts at the request of the cardholder. So the cardholder is involved in the communication strategy with the bank. And we've had a lot of success with certain institutions where the customer tells the institution, I'd like to receive a mobile alert when I do an ATM transaction over a particular value, when I do a point of sale transaction over a particular value, when my card's used on the internet over $50, or when my card is used abroad. And we will filter the traffic, which could either come directly from the switch, or it comes from the fraud system. And we filter the traffic and send you those alerts based on your individual thresholds. Like Michael said before, another alert that consumers find very useful is to be alerted when your balance drops below a certain level, because you know that you should not do additional transactions unless you want to go into overdraft and incur fees. But we do the same on the positive side when you receive deposits, so when your bills are being paid, or your salary comes in. In one of our implementations in Hungary, we also allow people to modify direct debits. So if you have a large direct debit coming out, we will actually send you a mobile alert before the debit is taken, and you can then either confirm or you can delay it by a number of days if you wish to do so by interactive SMS. And finally, when you approach Kenneth limit. The same system is also linked with your mobile payment scenario. So if you do a near-field communication, you can set up alerts to receive receipts. If you do person-to-person payments, you can alert the person of a payment being received, and then they can claim the payment. So once the system is in place, you can use it in a lot of your different assets. So to move on to that, as you know, ACI produces a range of payment products, and the mobile alerting solution, the MoneyGuard solution, is integrated with a range of those systems. So if we look at in the issuer domain, at the ACI issuer product, we can send alert when there's a transaction over a certain value, when a transaction is declined, and we have a whole range of different alerts that we can set up in the system, and that can be managed as part of your implementation. On the transactional side, we integrate with Base24, Base24 EPS, and with Postilion Real-Time. And again, we can send those customer service alerts when transactions are over a certain value. We can notify the customer when a transaction is declined, and we can also implement geolocation. So when we see an ATM transaction in a particular country, we can check if the registered mobile phone is in the same country. and then we can take action based on the result. We also do interactive balances, mini statements, person-to-person payments. We can do wallet implementations, and we can do interactive card blocking. So whenever the consumer takes the action, they receive an alert that there's a withdrawal occurring of over $500. They can reply that it's fraudulent, and then we can block all the activity after that alert. On the money transfer system, which is the system used for financial transfers between parties, we can again send transaction alerts and notify people when it's declined. And what's one of the main uses in that area is when you receive a transfer from another party, you can set limits to say, I want to be notified of any transfer over $100 or over $200, and you can selectively set your limits for which you are alerted. You can also set limits for which you need a secondary authorization via SMS. And then in the fraud and risk area, we've done quite an extensive integration, and we'll go into that in some of the further slides. But again, we can provide the service alerts based on the data that's available in PRM, but we can also link it directly with the rules system. So we can identify which rules are actioned by SMS, and then automatically, when those rules trigger, we send the transaction data to the customer with the option to respond and to say that this is fraudulent or not. And typically, the customer responds when it's fraudulent, and when it's not fraudulent, they are notified, but they don't respond. So you only have to manage by exception. We also notify the customer when a real-time rule fires, and then we are able to take action when the customer responds and says, sorry, that was incorrect. I was actually doing that transaction myself. And then we can send a message back to the customer to say, sorry for the inconvenience, you can now try the transaction again. And then we make sure that the rule doesn't fire the second time on the same transaction by icing that account. And we are linking geolocation as well into PRM, so we can actually detect if the customer is in a particular country. And the card blocking is fully integrated with the time-back functionality. And finally, in the mobile channel manager product, that the mobile banking component can be used to set through your application your alert thresholds, so to customize it per customer. Can be used for two-factor authentication, and obviously we can also send alerts on any of the normal mobile banking functions. So it's across ACI assets, and you don't have to integrate each individual asset with a telco for specific alerts. It's all done in a central system. But we're not just limited to SMS, because obviously SMS is the technology that is today most prevalent to interact with customers when you want to attract their attention. But we are seeing a lot of popularity of new messaging platforms at the moment, things like WhatsApp, iMessaging, and there's a number of new communication standards emerging. And what we do with our system is we are channel agnostic. So on the right side, you see the different, and I'll just put my little cursor on. We see the different channels here. So we have obviously interactive SMS, but we can also interact with applications. So some of the alerts can generate push alerts, and you can send a push alert in the iOS system to the phone for less critical alerts. They're not quite as quick as an SMS, but you can use push alerts when you want to have other types of messages that you don't need an immediate response to. We can link with internet banking. We can link with voice systems, so we can also use the automated voice alerts, which are popular in some regions, but most regions are more going to text-based messaging because it's less intrusive to the consumer. We can interact with email, and we can also link geolocation into the system. These channels then are linked through the MoneyGuard system with the assets you have in the back. So you can have multiple ACI and non-ACI assets that the system communicates with. So it could be your switch, your fraud management system, your card management system, your money transfer system, and your e-commerce scenario. And in the MoneyGuard system, we maintain the client info with the entities, which could be mobile phone numbers, email addresses, and other messaging IDs, and they are linked through a workflow that decides that when I receive a message from this mobile phone, I'm going to talk with this system, and then I'm going to send a message back to your internet banking. So you can link the channels with the different assets that you're talking to. So let's talk a bit practical, and let's talk about some of the customer success stories where we have implemented MoneyGuard. So firstly, we're currently doing a large processor in Poland, and they run an issuing operation on behalf of several banks with in total 5 million cards on issue. And there we're talking both to Base24 as well as to PRM, and we're talking to a third-party two-factor system. So the second factor on a transaction is generated in a 3D secure system, and we're using the MoneyGuard system to communicate with the cardholder the transaction detail and the challenge, which they can then enter into the browser to get authenticated. We're also there sending alerts for billing and overdue alerts. But there, it's again a mixture of bank-driven alerts and consumer-driven alerts. So the consumer can actually say, remind me 3 days before my bill is due. And we send a reminder message with the outstanding amount and the due date. And then we can send overdue alerts, which are bank-driven, if that date's been missed. We also allow people a very quick way to check their balance by just texting the word BAL into the service, and then they receive a balance back on that account. So it's typically BAL and the last 4 digits of the card number. The limits customers can set through their mobile browser, so they actually have an opportunity to click on the link, and then they can set the different limits by transaction type on mobile browser. And then the system automatically actions based on your own personally set limits. And finally, we obviously also do interactive card blocking. So when you receive an alert, you can reply, and you can then stop any further transactions directly from your mobile phone. So we're connected to PRM Base24. We're using a third-party one-time password generator. We connect to their web service-based client management, so every internet banking system of the member banks is connected directly into the system to update client details, and we provide all the billing for the installation. And we talk later about billing and the opportunity to charge for some of these alerts. So another example that we're doing is a Swiss credit card company. And they again run a multi-card operation for both in-house cards as well as loan accounts. And they are doing alerts from their fraud management system when transactions are declined or when cards have been blocked. But they also alert customers when they're open to buy amount, because obviously they're interested in people maximizing the use of their credit. So we send an alert when the open to buy amount is below a percentage of your credit limit. So you can say, if I go below 5% of my credit limit, I want to be alerted because I know that my card is starting to max out, as we say. We also show alerts for available cash balance, and after each ATM withdrawal, it will send a message of the withdrawal, and it will put the available cash balance in there. And then they've gone very active on promoting different packages, and consumers sign up for the packages and pay for the packages. And they have alert packages for online transactions, overseas transactions, cash. And also they can ask to be alerted for all transactions over a particular threshold that they can individually set. And then we provide campaign tools, and they are used by 3 different departments in the bank. They're used for fraud campaigns, if you have a mass compromise. They're used for collection campaigns, and they're used for promotional campaigns. And again, the promotional campaigns are interactive, so you can register your interest to receive more information via another channel. So we can then send out information by email if you respond to the SMS that you're interested in that particular action. And we're also providing the interactive messages to check your open to buy balance, your current balance, and your last transaction. And there again, we are connected to a range of assets, not just a single one. So connected to Postilion, we're connected to their card management system, which happens to be Efficient Plus. We're connecting to the services host, billing system, and a third-party fraud solution. If we then move to our oldest installation, which is OTP Bank, and they have been live since 1999, and so they've been live for 14 years, and they are Hungary's largest bank. So Hungary has got about 10 million people, and OTP Bank have 4 million cards. So they're the dominant bank in Hungary, and they send alerts for each transaction based on subscribed users. We also use variable limits, so a customer can actually identify that they have a daily limit. So they could have a daily limit of say $500, but their credit limit could be $20,000. And they can actually, through text messages, say, for the next 2 hours, I want to have access to my full limit, and then revert back to their mutually agreed daily limits. So they limit their exposure on the card. They also do balances, and they do the direct debit notification, so you can delay your direct debit through interactive SMS, and they have a number of pool messages defined. What's interesting, though, is that OTP Bank purely went for a subscriber model. So the customers subscribe to the service and pay for the service, and 35% of their cardholders are actually subscribing and paying for the service. And that's quite significant, obviously, on the card base. So they have 1.4 million users that pay for the service, and they generate 25 million euro revenue per year out of the system. But the other side of the coin is that because they have this high-speed interactive communication with their customers on transactions and fraud, that they have enjoyed one of the lowest fraud rates in the world for the last 10 years now. So we started in 1999 when they had very high fraud rates, over 30 basis points, and since 2002 we've been sitting between 0.2 and 0.3 basis points, which is one of the lowest fraud rates in the world, and that hasn't gone up at all in recent history. Another example, more in the Americas region, is we're currently doing a project with a large bank in Mexico, and they were scripting quite aggressive real-time rules in their PRM system, and obviously as a result, there was a fair amount of denial of service that customers didn't like, and so what we are now doing with the system is we will notify the customer in near real time when a real-time rule fired. So when the real-time rule has declined the transaction, then immediately we send you a message to say your withdrawal of 500 pesos in Mexico City was declined due to suspected fraud. Reply yes if it's you. So the customer then responds and says, that was me. And then we ice the account, and icing means that the rule will not fire again. And obviously we link the icing is a near real-time thing, and we link the near real-time with the real-time system. And then the real-time rule checks if there was a communication with the customer, and if the customer had responded, it will not block that transaction again. So we then also send a message to the cardholder that the transaction can be repeated. So the system becomes self-healing, and you don't lose the value of that transaction, and you also don't get your 21% attrition, because the customer knows that by responding, they can fix the situation and still use the card. So if we've used the terms near real-time and real-time a lot, so where does it fit in with alerting? So in the near real-time world, we basically automate the cardholder interaction. And I saw a question come through, is how are the rules set up, and can they be set up by the customer in a self-service scenario? So the rules are written in PRM as you write any normal near real-time rule, but you identify in the rule whether this rule is an SMS rule. And if it's an SMS rule, then it will still create the alert, but in a special queue, and that queue is managed by the MoneyGuard system and will automatically send the text message to the cardholder with the ability for the cardholder to respond. And in the reviewer panel on the user interface, you can actually see that the messages went out, and you can see if a cardholder responded and blocked their card, and you can see if the message was delivered. So generally, when a near real-time rule fires and the message was delivered to the cardholder and the cardholder didn't say, no, that was not me, then we assume that the transaction was not fraudulent, and then that transaction, that card will not be blocked. So you have a direct communication with the cardholder, which replaces the phone call that you currently make to the cardholder. Where we also use MoneyGuard in the near real-time space is to request a cardholder if they are at a particular location. So we can either do that automatically using geolocation services, or we can actually send a message to the cardholder to say, are you in France? And the cardholder responds yes or no, and then we can populate a table that the rule can then refer to, that when it sees a next transaction in France, then it can see that there was an interaction with the customer and that the customer actually physically is in France. So again, you can automate that rather than request the customer to proactively ring the bank when they're planning to do a trip, which is what most consumers don't really like to do. So those are examples in the near real-time space. In the real-time space, we always get the question, can't we just send a message to the cardholder in the authorization cycle? And the problem is, due to timeouts, it's not really quick enough. So if someone receives a message and then has to respond, then typically your ATM or your point-of-sale terminal has timed out. So where we use alerting in real time is that when a real-time rule has declined the transaction, we then notify the cardholder of that decline, and then the cardholder can reply to say, no, that was me, this was a false, and then we can fix the situation to send a message back, you can now redo the transaction and run fire again. And we also can use location information in real time. So if you've had an interaction with the customer on the first transaction to request them whether they are in a country or whether you've done a geolocation lookup, then you can write in the rule that the next time that you see a transaction in a foreign location, you check if you've had an interaction with the customer and if they're physically there, so you don't have to decline that transaction again. So that's where we use it both in near real time as well as in real time. So we then move on to the business case. So the business case is sort of split up in hard benefits and soft benefits. So generally, and a lot of banks will say our customers won't pay for this service. Well, the experience around the world is that if you give customers the option and you give them also the option to set their own preferences, that you'll find that a large proportion are willing to pay for the service, provided the cost is relatively low. And we normally say charge the typical charge of a non-us ATM transaction. So that's often like $2 or $1.50 or $1.75 or €1.50. So generally a relatively low monthly charge, which includes 10 or 20 alerts, then you will see you'll get quite a reasonable percentage of people sign up for the service. And that self-monitoring will generate, obviously, alerts that are customer-driven, and those alerts also reduce fraud by a large factor. Another hard benefit of the system is that it really reduces your false positive ratio. This is much cheaper to send an SMS. You basically can, and you only have to work the alerts where the customer responded to say it was fraudulent, then your false positive ratio is zero. So basically you don't have any falses anymore because you only work the ones where the customer has responded. And obviously this lowers significantly your call center costs because you have more self-service. And because the alerts are cheaper, you can widen your net. So you can write more rules to say, I'm sending an alert for every transaction over $500 because a text message will cost you between 2 and 5 cents, depending, or 6 cents, depending on the country. And then there are the soft benefits, and that links back to the research, is that if you deal with a fraud scenario or potential fraud scenario well, and you have real-time interactive communication with your customer, you're going to have much higher customer retention rate. So you won't have 21% leave you after they've experienced fraud because you've informed them, you've kept them in the loop, and they've been part of the solution. And that will also increase your share of wallet. So if we just, before we finish, do a little bit of calculation at the top of our head for the business case. So on the near real-time rules, so I've been attending a few of the PRM user group meetings, and if we assume a false positive ratio of 8 to 1, so you have 8 falses and one positive to catch a fraud case. If you work it by SMS, if you send 8 SMS messages, it will cost you about 40 cents. If you work 8 alerts via an analyst that makes a phone call, then conservatively that will take you about 30 minutes of labor. And if you look at your average cost of labor loaded with your overheads, then we're looking at a cost of about $20. So 40 cents to do the same type of work via SMS and $20 to do it in person. Plus the consumers would prefer to get a quick text message rather than have to talk to someone when they're in the middle of a meeting. So that's on a near real-time side. So that basically shows you the efficiency improvement. On the real-time rules, we're talking very much customer service. So again, an industry figure is 2 to 1, 3 to 1 false positive ratio, because obviously you're a bit more conservative with real-time rules. But if you have 3 to 1, 2 customers cannot use their card and they are upset with the bank because the transaction was declined and they were doing it themselves. So when we use interactive mobile alerting, you can fix that. So the customer can confirm the transaction, the account is iced, and they can redo the transaction. Now, we calculate the financial impact of that, apart from the attrition. If I'm on an overseas trip and I'm using my credit card to pay, say, 3 nights in a hotel at $600, the exchange rate commission a bank typically charges around 3% on top of the interbank exchange rate. So on a $600 transaction, that's $18 exchange rate commission. Add to that your 1% merchant service fee, then you're looking at losing on that transaction $25. If I then don't use my card for the rest of my trip, then that particular false positives has lost you over $100 in lost revenue. And that's often not taken in consideration. You often look at how good your rules are, but you don't actually calculate your lost business because of the falseness of those rules. So that's your improvement of service. And finally, the customer-driven alerts actually will generate you significant revenue. And we have some very good examples of customers of ours making money out of the system, and OTP Bank being one of them. And again, if we take an easy calculation, saying you have 1 million cards in the system, and in Hungary we had a 35% adoption, and I've seen other systems where we had 30 to 40% adoption. So be conservative. Let's assume we have only a 10% adoption, and you make $1 net revenue per month out of that. Then 1 million cards gives you $100,000 revenue out of the system, and approximately that pays 10 times for MoneyGuard. So per month, obviously not in total, but that means it has an extremely rapid payback. So we've modeled this, and again, you can approach us after the webinar, and we can provide you some tailored business models where you can calculate all those effects on your business. So that leads us to poll question number 3. So which of these benefits do you think are most attractive? The improved efficiency, the improved service, the fee income, or all of the above? And it's a multiple choice question, and obviously you're allowed to put in all of the above, or put 1 or 2 of the 3 in there, so you don't have to just tick a single box in here. And often, and that's so the poll has just gone through, and often people will say we won't get a fee income, but generally all of the above is so as we see as the outcome. Most people like to receive all of the benefits, which obviously was a bit of a leading question. So that's obviously a good outcome. So we'd like to use most of the aspects. So that leads us to our conclusion before we open it up for questions, because I'm conscious of the time. So basically, interactive mobile alerting is a real-time channel contact strategies, and we see today's consumers are more and more expecting this from their bank. And here on the right, we're showing some interactions that you see. So an alert goes out, customer replies block, and then a response comes back that we've blocked your card. Here you can see how you can set on your mobile browser your own notification levels. we've partnered with ACI, and we provide the one single solution platform you can use with all your assets, both ACI and non-ACI assets. And in the same platform, you can also use other mobile initiatives. And with that, I'd like to finish my part of the presentation, open up for questions.
Thanks very much, Gerard. And to that point, we do have a cross-section of ACI customers on the call today, joining us from owning various solutions from fraud to payment solutions. So I think this gives a broad view of not only just the fraud, but the customer service alert capabilities that can be achieved. We do have some questions in, and so I'll start with the first one. How high is the adoption and use of geolocation-based monitoring, since many people disable their location services on their mobile devices?
So at the moment it's very much a newly emerging way of combating fraud. Firstly, the disablement of location services doesn't help. So we're not pinpointing where the actual phone is. We're checking which country the phone is, and that cannot be disabled on the phone. So whenever you log into a network when you're roaming, that's registered with your home location register, so with your telco. So if we use a US example, you're with Verizon. For US is probably a better example because the HLR doesn't work in the US, but it works in other 198 countries around the world. So basically, your home location registers where you are. And when you're roaming in another country, we can do an online lookup where the phone is roaming. Anywhere except US, Brazil, and Canada, unfortunately. But then you can see real time where that phone is, and then you can use that in your rules. So for any customers, for instance in EMEA, Pacific region, South America, you can basically look up where the phone is, irrespective of the consumer. And then work that in your rule. But you can't pinpoint it down to a physical location, which can certainly pinpoint it down to the country, and that is a sub-second lookup. So that's on that question.
Okay, thanks, Gerard. Sorry, important distinction there in terms of the geolocation. The next question so what's involved in implementing a solution like this? How long does it take? And what's involved from the bank perspective?
Yeah, so obviously we have done standard integration with a number of the systems. So the integration with the PRM is off the shelf. So we have a standard way that we detect when a certain rule is fired. We have a way to set up the dialogue with the customer, and we have a way to interact to then block cards. What's involved with the bank is we typically do a workshop with the bank to work out what they want as message content, what functionality, how they want to respond to a response from the customer, whether they want to go to the call center or whether they want to do automatic blocking. We then customize the system based on that. We also talk to the bank about the enrollment. So obviously we receive typically the card numbers and mobile phone numbers through either a web service from their CRM system, or we have a bulk file interface, and then we connect with their local telco supplier or an aggregator, which are normally also standard protocols. Generally, it's a basic PRM or Base24 integration is a 6 to 8 week project from start to finish. So there's a workshop, then there is a small customization to link it with your specific systems, and then the system goes live. Some of the bigger projects probably take between 2 and 6 months, but generally it's fairly quick to market from the moment you say, I want to start alerted to actually implementing it. And we've designed it so that the impact to your existing systems is minimal, and we use existing interfaces in both PRM as well as Base24 and the other assets that you may have. Great,
thanks, Gerard. One additional question here. What's been the feedback of consumers who have used it? So I'm guessing we talked about what the benefits are from the bank. Do you have any insight in terms of the consumers that have used it for some of the examples.
Yeah, so we definitely have seen a lot of positive consumer feedback. So one of the things that always tells a tale is your attrition rates. So we've been monitoring with OTP Bank specifically the attrition on the service, and they've virtually seen a zero attrition since they launched it. So every year the number of users has gone up, and those users that have taken the services have pretty much never cancelled unless they left the bank. So we've certainly seen a very positive feedback from consumers that they continue to use it. And we also see that, especially in the current generation that's growing up, that they're a lot more tax-oriented than we used to be. And a lot of people start to expect it from their bank. I just see another question as well. And that question was, how are the rules set up? Can they be used as customer self-service activity in our online banking front-end application and then feed the information back to ACI via web service? That's exactly the way we do it, yes. So we're doing the current project in Switzerland, for instance. We work directly with their e-services. They've created a web page as part of their internet banking where people can set their own limits and preferences, and then that's connected to our service directly through a web service. And in the case of processors, we do the same, and we connect the individual internet banking services through certificated web services so that we can then update the data dynamically as people do the selection on internet banking. And that can also be done in their mobile banking clients. I think we've reached the end of our time slot now. So are there any other further questions?
Gerard, I think those are the questions that we have at this point. I want to thank you for your time today and for all of the participants' time today. We will get a copy of the webinar itself out after today, and we will provide a link to the research. So again, if you have additional questions, please feel free to reach out, and you'll have the opportunity to view the webinar again in case there was something specifically that you missed. Appreciate everyone's time today.